So welcome to today's presentation. My name is Peter, Joseph, Senior Market Analyst at IronFX. We're going to be mixing practically fundamentals with technicals today once again. In front of your screens you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame. We note that there seem to be some slight bearish tendencies, but nothing as convincing just yet. It's characteristic that, let me narrow the former. Here we go. You can see how the US dollar slided against its counterparts during yesterday's session, yet the movement remains rather convincing in the sense that we still have a flattening out of the moving averages. And I would be highlighting also the RSI indicator, which remains near the reading of 50. Also, the price action, despite dropping, was not even able to reach the 101.55 support line. So overall, the situation seems to maintain a sideways bias here. On the fundamental front, though, we expect that in the American session we're going to be having some considerable releases which may more or less shake the US dollar. We make a start with the release of the US CPI rates. They are for March. Now, sorry, mind you that the headline CPI rate is expected to roll down from 6% year on year to 5.2% year on year. And should that be the actual rate to be released, that would imply practically that inflationary pressures may have eased somewhat and most probably could also solidify market expectations for an easing of the Fed's hawkish stance. So overall, a slowdown of the US CPI rates would be practically weakening the US dollar. In such a case, we may see the pair dropping, breaking the 109.55 and start aiming for the 100.65. Mind you that a bearish reaction, depending on to the degree which we see the roll down, the slowdown of the US CPI rates, would also be determinant on the volatility presented. Should the actual rate and figure be near the priced in prices, say the expectations, the market expectations, then I would expect, some market reaction, but not as wide as if the actual rates surpass market expectations and slow down even further. On the flip side, should the US CPI rates actually fail to reach the market expectations and remain rather steady or even accelerate, that could provoke practically a very, very strong bullish market reaction for the US dollar, which would be practically leading it to break the 102.45, possibly reaching, if not even breaching, the 103.05 resistance levels. So it's an issue. It's just before the American session starts. So I would be keeping my guards on the release, at the time of the release. For any wide volatility, definitely place your stop loss orders should you trade at that period, just to be sure. On the other hand, we have to note that later on we also get the Fed's meeting minutes. It should be noted that we had conflicting signals from Fed policymakers yesterday. we had, on the one hand, comments by Minneapolis Fed President Neil Kashkari, which sounded to be quite hawkish. Also, Philadelphia Fed President Harker was quite hawkish. It seemed to imply that the Fed's hawkish stance is to be continued. On the flip side, though, we also got some comments from Chicago Fed President Goolsbee, where he stated practically that prudence and patience would be advisable regarding the Fed's monetary policy. So that tended to imply that also the bank remaining on hold in its next meeting is a possibility. And such a scenario should not be taken lightly from traders. But overall, I expect that it's going to be an interesting read. Should the document actually show that there is a wide majority of hawkish Fed policymakers, that could more or less strengthen the US dollar and push it probably above the 102.45. On the flip side, should we see a wide number or even intense opinions of Fed policymakers that the Fed may start pausing or may even pause its rate hiking path, that could imply practically a weakening of the US dollar, as that would more or less show a divide between a reef between Fed policymakers and a struggle for which opinion is going to be strengthening most. Nevertheless, in any case, I would expect the Fed to remain data driven, mostly regarding its next interest rate decision. Hence, the release of the US CPI rates today is going to be very interesting, as it's going to be also completing the latest employment data, which we already had. And to tell you the truth, they were not that bad. Okay, we had a considerable drop of the NFP figure. On the other hand, though, we had also a tick down of the unemployment rate, which tended to highlight exactly how tight the US employment market is. And it's going to be an interesting read, because if we have also, on the one hand, a tight employment market, on the other hand, we have slowing CPI rates, it's going to be interesting to see how deep the hawkishness of the Fed actually goes. I think that would be the key events for the day. But I would be also noting the release of the Canadian Central Bank's interest rate decision. We see that, we'll discuss that later when we get to USD CAD. For the time being, let's move away from the US dollar index and to Euro USD. Euro USD, which seems to be having some bullish tendencies. It's interesting how the pair is actually flirting at the 1.0925. We had discussed yesterday and mentioned that most probably the pair would remain in sideways motion just below the 1.0925. That's what's happening right now. There is a strong persistence on behalf of the bulls, though, for it to break the R1. We have to note also that the boys at research highlighted this. Let me show you. And on the other hand, yeah. So we can see that a bullish triangle has started to form, it's forming, and I would expect it normal to break above the R1 1.0925 clearly and start aiming for the 1.1125. However, that would be a result of a possible weakening of the US dollar mostly on a fundamental level, as the pair seems to be more USD driven. It's a very, very interesting formation. It's a clear bullish triangle, which tends to imply that a bullish movement is to be expected here, given that the trend line usually tends to be stronger than the resistance line. Should the bulls take over, I would expect the price action to rise, break the R1 1.0925 clearly, possibly a higher peak than this one, and start aiming for the 1.1125. We're talking about here 200 pips. Okay, usually within a day, the movement of Euro USD is around 100, but given the possibility of high volatility during the release of the USCPI rates and the Fed's meeting minutes, we may see the bullish movement being stronger than expected. But that's just a possibility for now. On the other hand, should the pair remain in a rather sideways motion, I would expect it to at some point correct a little bit lower, break the upward trend line, and remain below the R1 1.0925. For a bearish outlook, despite that seemingly being quite remote, we tend to highlight the possibility as we may see the US releases today actually strengthening the US dollar, and that would be a big surprise. In that case, say for example, when we see that USCPI rates have accelerated, despite that being a distant scenario, it's something that very few people are expecting, and I would expect it to cause an asymmetrically high market reaction, substantial support for the US dollar. In that case, we may see the Euro USD dropping, breaking the upward trend line, possibly breaking also the 1.0760 and start aiming for the 1.0525. It's an extreme case scenario, it's a contrarian scenario, but it's worth mentioning. Moving now to GBP USD. GBP USD, which seems to be maintaining a sideways motion, yet it has remained below the 1.2435, and we should reverse this immediately to a resistance line, locking it in. Let's go hunting for a new ultimate support line. I would expect, see these choose here, 1, 2, 3. There were consecutive support levels for the pair. So I would be highlighting this as the third support level. In green, that would be the 1.1915. Let's also correct the labels. There you are. And the R3 now is being placed at 1.2775. The R2 at 1.2590. The R1 at 1.2435. The S1 at 1.2265. The S2 at 1.2105. And the S3 at 1.1915. Okay, for the time being, we tend to maintain our bias for sideways motion just below or around the R1 to be maintained. It's characteristic that on the one hand, we have a narrowing of the Bollinger Bands. See how all the moving averages are converging. All of that tends to imply, and they're flattening out. All of that tends to imply a rather low volatility, while also there are some indicators running along the reading of 50, implying rather decisive market. All of that's in favor of the sideways motion being maintained. On the other hand, we may see once again the US releases we have mentioned altering the pair's direction. But at this point, it would be interesting to note that it's not only the US releases today, but we have also very early tomorrow in the European session the UK releases, which include the GDP rates for February, manufacturing industrial output also February, if I'm correct, also the trade balance for February. So should we see some positive signals coming out, that could provide some support for the pound, which may allow it to break clearly above the 1.2435 and start aiming for the R2 1.2590. Mind you, tomorrow in the American session, also Hugh Pill, the BOE's chief economist, is scheduled to speak and could create some volatility. Usually, Mr. Pill is more tilting towards the hawkish side, I think. That would be my impression. Such a speech could provide some support for the pound. Now, at this point, I would like to make a small readjustment of the chart just to widen it out and show the smaller details here. Let's reposition the labels as well. Now, we've covered the possibility of a sideways motion for the pair. In the case we see that the US dollar strengthens, or if you prefer, the pound weakens, take your pick. At that point, we may see GBP USD dropping, possibly breaking the 1.2265 or even testing it. That would be a bearish scenario in my opinion. We would be getting possibly consecutive lower peaks and lower troughs, which may lead the pair even lower below the S1 1.2265. In case we see the pound strengthening and the US dollar or the US dollar weakening, then we may see the pair rising, breaking the 1.2435, and that would be paving the way for the 1.2590. Now let's move out and let's go to USDJPY. USDJPY, which has been on the rise. That's interesting in the sense that on the one hand, we have a weakening of the US dollar, yet despite its weakening, the USD seems to be even stronger than the JPY, and that would be also an implementation that the market sentiment seems to be improving and the Japanese yen may be having more safe haven outflows than the USD. In any case, though, I would be noting that the movement was, I wouldn't say slight, but after the late American session yesterday, yes, has remained rather low, the volatility, despite this sudden jump here. Now let's go hunting for a new ultimate resistance line. We're placing this peak here. And I want to balance it also with this true. And that would be in red, the 139.75. Readjusting the chart, repositioning the labels. Starting with the S3 now at 128. The S2 at 130.40. The S1 at 133.70. The R1 at 135.70. Yeah, 2 at 137.80 and 3 at 139.75. For the time being, we tend to maintain a bullish outlook for the pair on technical basis, given that we see that the upward trend line was not interrupted despite some slight stabilization. But at this point, it would be interesting to note that supporting our idea of a bullish outlook for the pair, we have still an upward slope 20 moving average. Mind you that the 50 moving average has just about crossed the 100 moving average, another bullish sign, while the RSI indicator is pretty high. It's at the reading of 65.2 right now, which is also implying a rather bullish sentiment on behalf of the market for USD/JPY. And I wouldn't be surprised to see the pair starting to aim towards the R135.70, especially should the US dollar weaken. Mind you that USD/JPY may be more sensitive to the release of the US CPI rates for March today, due also to the current trade conditions. On the other hand, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the 133.70 support line, breaking also the upward trend line, and aim, if not reach, the 130.40 support level. Okay, let's have a look at the USD CHF. Quite the contrary. Despite USD JPY being on the rise, or at least having some bullish tendencies, it's the opposite by USD CHF, which has dropped and stabilized just above the 0.9020 support line. A support line which once again tends to highlight its importance. I would expect the sideways motion to be maintained, but we have an RSI indicator which is nearing the reading of 30. It's actually right now at 37 and dropping. So that may be implying a bearish sentiment taking over the pair, and in that case we may see the bears ruling the direction and pushing USD CHF lower than the S1 0.9020 towards the S2 0.8935. On the other hand, don't forget that for a bearish outlook on a technical basis, we also need a clear-cut drop breaking the S1, which provided support here. Should that fail to be the case, then we may see the pair correcting a little bit higher and stabilizing between the 0.9115 resistance line and the S1 0.9020. For a bullish outlook, despite that seemingly being remote, it may be remote, okay, but it's still a possibility and we should cover it. That would imply practically that for a bullish outlook, we require the price action to reverse direction, rise, and at this point, for a bullish outlook, I would require a clear break of the R1 0.9115, a higher peak than this one, which would pave the way for the R2 0.9220. Okay, let's move now to AUD-USD. AUD-USD, which maintained a clear-cut sideways motion. It's characteristic how yesterday the price action had broken the downward movement after bouncing on the S1 0.6625. On a fundamental level, I'm a little bit worried about the OSIC. I'm actually quite worried. Definitely the tensions, or if you prefer, the rising tensions in the US-China relationships, which are in regards to Taiwan. Should they escalate further or overspill to other issues, we may see an adverse effect on the Aussie. Mind you that also Chinese President Xi and the Brazilian President Lula are about to meet. And definitely we're going to be having some announcements about BRICS. I wouldn't be surprised. Uh, In the contrary, I would expect it. And that could intensify the situation even further. On the monetary level, I would be noting that we had some comments by RBA Deputy Governor Bullock yesterday, Michelle Bullock. Now, she stated that the bank would pause its rate hiking path even, even despite the banking crisis. So, practically, what she said is that even should there be no banking crisis on a global level, the bank would still pause its rate hike path. So, practically, that tended to underscore, I would say, the decisiveness of the bank to actually remain on hold. And I think that's the new modus vivendi, which definitely is not something which is supporting the author. On the contrary, it's something which could weaken the author. On a more fundamental level, again, I would expect the market sentiment to drive the Aussie, given that AUD is a commodity currency. It's clearly connected within market participants' minds that should there be a positive global outlook, then practically business for Australians will be booming once again and could provide some support for AUD. On the flip side, should the market sentiment be pessimistic and more cautious and more risk avoided, then we may see the Aussie slipping, as risky assets, exactly such as commodity currencies, may come out of favor. As for financial releases, I would be highlighting Australia's employment data, bro. And mind you that the employment change figure is expected to drop to 20K, while the unemployment rate is expected to tick up from 3.5 to 3.6, if I'm correct. And in any case, that would be an issue for the Aussie and could weaken the Aussies. That would imply practically that we have weakening, or if you prefer, an easing of the tightness of the Australian employment market, more or less, in my opinion, that would be a negative. On the other hand, though, we have to mention here that, okay, ticking up of inflation and, okay, the employment change figure dropping to 20K, but still 20K, it's not a bad figure. I wouldn't say that the overall picture is not that bad for the Australian employment market, but definitely a slowdown of the employment change figure and the tick up of the unemployment rate could weaken the Aussie. Also, I would be noting during tomorrow's Asian session the release of China's trade data for March. I think Aussie traders may keep a close eye on the release of the import growth rate. Now, the import growth rate for February was already in the negatives at minus, if I'm correct, 10.2% year on year. Another contraction could imply more difficult times for Australian exporters of raw materials to China. So it may have an adverse effect on the Aussie as well. Now, on a technical level, we have mentioned that we expect the sideways motion to be maintained. On the other hand, though, we have to note that both on a fundamental level, on a monetary policy outlook level, as for financial releases, so on a macro level, all three fundamental indicators are pointing downwards, with one exception, the market sentiment. Should the bears take over, we may see the price action of AUD USD dropping, breaking the 0.6625 support line, and start aiming for 0.6520. On the other hand, should the market sentiment push the price action of the Aussie higher, especially should the US dollar weaken due to the US financial releases today and the Fed's meeting minutes, we may see the price action actually being able to break above the R1 0.6755 and start aiming for 0.6855. Once again, though, should the USD weaken substantially, that's one case. Do not underestimate the possibility of the US dollar strengthening, in which case we may see an abnormal, asymmetrical high market response. Okay, let's have a look at USD CAD. Now, in regards to USD CAD, I would like to readjust the levels here. A recalibration, in my opinion, is needed in the sense that we had a new peak somewhere here. Also, I would be noting this show here. Interestingly enough, note that there is a downward trend line being formed, but the overall movement is between the R1 and the S1. I would like also, though, to readjust the S2 and S3, as the S2 could go substantially higher at this level, say for example, where we had one test, second test as well. Yeah. And let's have a look also at the S3. Okay, there's this true here, but in my opinion, that's far too close to the second support line. I would be noting this one. Could go even a little bit lower here. And here. Test it here, here, and here. I think that's the one. Let's keep those levels. Let's readjust, make the necessary corrections. Okay, there's some wide distance between the S2 and the S3, but symmetry is not exactly my main worry right now. The R2 and the R3 remain as is, as we have multiple touches for the R2, both on a resistance level as well as on support level, while the R3 is highlighting exactly 1, 2, 3 tests. The R1 now is being placed at 1 point, let's have a look, 35.45. The S1 is now readjusted to 1.34. Yeah. We're giving practically the price action a wide sideways motion. The S2 now is being replaced at 1.3270. Let's have a look if that's still holding. Unlocking the chart, yeah, it's a good one. Readjusting it. Now, and the final support line now is being placed at 30.95 as it was. Okay, so USD CAD, maybe the most interesting pair of the day. Why? Because we have on the one hand the US CPI rates and the Fed's meeting minutes in the American session today, but also today in the American session, we're getting a CAD related release, and that would be BOC's interest rate decision. Now, the bank is widely expected to remain on hold at 4.5%. It's characteristic that currently CAD OIS implied probability of nearly 95% for such a scenario to materialize. So practically the market seems to have almost fully priced in the possibility of BOC standing pat. Hence, I would be shifting my attention towards the bank's forward guidance, which may be included in the accompanying statement. Now, should the forward guidance actually show the determination of the bank to remain on hold and not proceed with any more rate hikes, that could create some slight bearish tendencies for the Canadian dollar. But I think that would be also most probably aligned with the market's expectations. On the other hand, we have to note that should there be some hints, some innuendos that the bank may proceed with some rate cuts in the future months, that could substantially weaken the Canadian dollar. That would be a big issue. On the other hand, we may see the BOC actually warning that it may have to hike rates once again should inflationary pressures be on the rise, and given the rather tight employment market for Canada. So in that case, we may see the CAD gaining substantially. And that would be pushing USD CAD far lower. On the other hand, though, a possible slowdown as our expectations of the UCPI rates could be pushing the dollar lower, which would be practically pushing the whole pair's price action lower. And it's a big issue on how the market will be balancing out in today's American session after consecutive releases for which will be related to USD CAD. Also keep an eye out for oil prices, as the Canadian dollar is quite positively correlated with oil prices, given that the Canadian economy is a major oil producing economy. Hence, whenever we see an appreciation of oil prices, we may also see an appreciation of the CAD and vice versa. Let's have a look at oil prices, how they are moving. They jumped. That's interesting. Okay, we have a jump above the 80.90 resistance line. It's been puzzling oil prices for quite a while now, actually almost a week or so. Let's have a look. Since the 3rd of April, we're talking about 10 days back. It was just able to break above it. And that despite the AP weekly crude oil inventories figure showing that practically the US oil inventories for the past week had increased, which would imply even slightly, but that would imply that the tightness of the US oil market has eased. And I would expect that to have more bearish effect on WTI price. It wasn't the case. It seems that the market expectations for an increased demand side for the oil market probably from China, is pushing WTI prices slowly but steadily higher. So that could be causing some hesitation back to the USD CAD chart, some hesitation for cut bears, and allowing USD CAD to actually drop even lower. It's a very, very interesting chart. In any case, should the bears take the lead, or if you prefer, maintain the lead, as in the past 2 days we see a clear downward movement with consecutive lower peaks and lower lows, which would be more obvious in the 1 hour chart in my opinion. Here it is. It's a nice clear-cut downward movement. That would drive the pair below the S1 1.34, practically paving the way for the 1.3270. Mind you though, I would require a clear-cut break of the S1 1.34 before adopting a bearish outlook. Why? Because I would be requiring a lower low than this one here. On the flip side, should the pair remain rather stable and possibly break the downward trend line we have just mentioned, in a sign exactly that the downward motion was interrupted and stabilized between the 1.3545 and the 1.34 levels, then we would be talking about sideways motion. Hence, the relative bias in favor of a sideways motion would be emerging. For a bullish outlook, despite that being rather improbable, given that we have also an RSI indicator which is quite low, it's actually at the reading of 40 right now. In that case, I would require a higher peak than this one, so I would expect the price action to break the pre-mentioned downward trend line exactly in a first sign of a change in trend, but also I would require breaking of the 1.3445 in a sign that the bulls have actually taken over. Mind you, the next possible stop for the bulls could be the 1.3645. Once again, high volatility may be present. It's not for certain, but there is a high probability for that. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Today, we will look at debt-based investments and their difference from stocks. While as a trader, you can trade stocks via CFDs without actually owning the underlying instrument, an investor will invest in the actual stock and own it. Most investors focus on investments that aim to increase wealth and to help them reach their financial goals like a comfortable retirement or the ability to pay for their children's education. When investors buy stocks, they purchase assets whose value is expected to increase and provide a nice return when sold. Investing in stocks also allows the owner to access a portion of the company's profits through dividends, share buybacks, or reinvestment, which helps to grow the company's and the stock's value. The stock market offers volatile returns over short periods of time, such as 5 years or less, but high returns over decades-long time periods. Debt investment can be government, corporate, and municipal bonds, as well as real estate investments, peer-to-peer lending, and personal loans such as mortgages. With a debt-based investment, you do not own an asset or a company, but instead you lend money to an individual, corporation, or government in exchange for a fixed income in return. Such investments typically offer a lower return than stocks, but are considered to be more consistent. There is some risk involved, as you might not be able to receive the funds you have loaned, and it's so important to choose your investments wisely. While they might be less risky and volatile than equity investments, they offer lower returns. The bond and mortgage market has fewer price changes than stocks. Equity investments, such as stocks, are securities that allow investors to have a claim on the earnings and assets of the corporation. Common stock trader on popular stock exchanges is the most popular equity investment. The stock market is very volatile, with rapid changes in share values. These fluctuations are usually related to political, social, or other issues in the home country of the corporation. Equity investments are famous for high risks and potentially higher rewards. It is traditionally recommended to investors that they hold both equities and debt-based investment for better diversification of their portfolio. Debt-based investments perform differently than stocks and increase during years of large stock declines. An individual's exact allocation is dependent on the investor goals, risk preferences, and investment time horizon. When it comes to trading, it is important to understand that all trading comes with risk. Depending on your trading goals, you can choose what suits you the best. You can always tailor your trading actions to match your objectives and risk tolerance. Thank you for watching.
Right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular trading chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also a indication of a divergence, which in this case we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we're looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Yeah, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem that like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candle wick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. You can see that there is a support and resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for, gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. There's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, the upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards the resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 272 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. It's a Franken. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar cat it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry, 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.